Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Shruti Mishra. These are the top headlines from the startup space. Crypto developer Consensus backs $450 million in a Series D round. Company now valued at $7 billion. The round was led by Parafi Capital. Also saw new investors like Temasek, SoftBank, Vision Fund 2, Microsoft and others participate.
Recruitment and employment management startup Multiplier raises $60 million in a Series B round. Fundraise was co-led by Tiger Global and Sequoia Capital India. The company is now valued at $400 million.
Tata-owned 1MG makes a strategic investment in digital diagnostic firm 5C Network. Vikram Vuppala, founder and CEO at Nephropolis, Dr. Om Manchanda, Managing Director Lal Path Labs, and Viren Prasad Shetty, the CEO of Narayana Health, also participated.
Fintech unicorn Razorpay acquires digital payment startup Zealand Technologies for an undisclosed sum. This marks Razorpay's fifth acquisition and will further strengthen its banking solutions arm.
SaaS-led fintech startup Clear buys supply chain financing technology firm Xpedize for an undisclosed sum, marks Clear's second acquisition after taking over B2B payments platform Ybanq in July last year. With this deal, Clear marks its foray into the SME credit and B2B payment segment.
SoftBank's billionaire founder Masayoshi Son's fortune crashes by $25 billion in the past year, according to the Bloomberg Billionaires Index. His wealth currently stands at $13.7 billion. The SoftBank stock has tumbled almost 60% in the past year.
Alibaba and Tencent prepare to cut tens of thousands of jobs combined this year as the internet firms try to cope with China's sweeping regulatory crackdown. As per a report by Reuters, Alibaba could axe more than 15% of its total workforce. Meanwhile, Tencent's overseeing businesses unit will see a 10% to 15% headcount cut.
Those are the headlines we are tracking for you this evening. Let's start the show with some M&A news. Fintech SaaS company Clear has acquired supply chain financing technology firm Xpedize. Now remember, this is Clear's second acquisition after taking over Ybanq, another B2B payments platform, last year. Now with this acquisition, Clear hopes to leap ahead in its plans to enter SME credit and B2B payments. To talk about the road ahead at Clear, joining me now is its co-founder and CEO Archit Gupta. Archit, welcome to Startup Street. Tell me, what made you acquire Xpedize? How does the acquisition help you scale? What was the cost of acquisition? I understand that Xpedize will be rebranded as Clear Invoice Discounting, but what happens to the team? If you could take me through the specifics of the deal.
Right. So thank you for having me. Basically, as you mentioned, this is our second acquisition in the space, in the financial services fintech element of our company. We have historically been a SaaS provider. Now we are adding financial services, both in the form of payments and credit. For us, this is a very strategic acquisition, as we are able to add invoice discounting and financing to our SaaS platform, where we already see like $500 billion of purchases and 200 million invoices flow through our platform. So what this does is it helps small and medium merchants on our platform get access to credit, which is going to be non-collateral backed. It helps them liquidate their invoices and get access to capital very fast. And for us, this acquisition helps us go on our ambition of scaling payments and credit on our platform at the SaaS level. Coming to your second question, the acquisition brings along the 27-member team of Xpedize to our company, and we are onboarding all of them. So basically, it's a full buyout. With the Xpedize was started in 2017 by the two co-founders, Regan and Deepak, and they are ex-Citibank folks. They were funded by HDFC Capital and multiple other folks. So together, this is coming as a 27-member org into Clear, and it will be branded, as we mentioned, as Clear Invoice Discounting.
All right. Like you said, I understand that the invoice discounting solution will be available to Clear's existing 3,500 enterprise customers. But what is the kind of impact you hope to create? Tell me, how will Clear's new vertical help large enterprises pay their suppliers faster? What is the USP? How does it work? If you could take me through the offerings.
Right. So today, as we have bought the Xpedize platform, we are discounting about like $100 million USD right now. The goal is to take this to $3 billion USD over the course of the next 18 months. So fundamentally, we want to scale this up in India dramatically. Like this is a 30x scale that we are talking about. And create significant impact because we have 3,500 enterprises on the platform. For us, this is a cross-sell product to help their vendors and dealers, distributors, where we hope to impact 200,000 merchants, which are supplying to these 3,500 enterprises. So overall, the goal is to get to $3 billion of fast payments and impact 200,000 merchants at this time.
Picking up from what you just said, Clear is targeting to achieve $3 billion, throughput by FY24. But if you could take me through your existing partnerships with banks and NBFCs, how do you plan to ensure a robust supply of credit to a wider supplier base?
Right. So with this acquisition, we are tapping onto 3 to 4 credit sources, capital sources as we speak, right? The first one is the treasury of the anchor enterprises themselves, which is lying around, and they want to earn higher rates because the treasury rate of return is very low, and this program can dramatically expand the returns on the treasury for the anchor enterprises. Second is using platforms which are registered with threads such as RXIL and M1 Exchange and others. We are integrated with one of them, and then Citibank is one of the providers, and then 1 or 2 NBFCs. Now, with that said, we are making this for the 30x scale that we talked about. We are adding a lot more capital providers. These are coming in the form of multiple large private banks. We are in conversations to onboard 6 of the largest private sector banks in India, and bringing on the top 5 NBFCs, which have a deep interest in the SMB space.
All right, so a lot of partnerships happening there. But you had previously acquired Ybanq, a Y Combinator-backed enterprise payment startup in 2021. How has that acquisition worked for you? Also, is inorganic growth the way forward for you, Archit? Any more acquisitions in the pipeline that you can talk about?
Right. So for us, twofold. One, Ybanq introduced in our company a payments DNA. So first, we were historically doing SaaS for invoicing and taxes. With our goal was to also add payments and credit, payments and lending to our offerings. So with Ybanq, we added payments, and we have now launched our first version of the product. It has gone live with 40 odd customers in 40 odd enterprises already, and we are going to scale that up. So that acquisition has worked out really well. The co-founders are fantastic, and we have had a great journey. And on the second question, right, like the inorganic and acquisition part,
yes,
our business continues to see very, very strong organic growth, and we are adding capability pillars. So basically, for us, payments and lending are capability pillars, and we will scale them organically to a very large scale in India. In terms of inorganic acquisitions, we continue to look in spaces of enterprise SaaS, enterprise financial services, and as we are expanding internationally, we are looking at opportunities internationally. We are present right now, for example, in the Middle East market, and we are looking at Western Europe and North America.
Okay. While consumer payments have become real-time thanks to UPI, Indian businesses need access to faster payments and efficient financing. And this is the pain point, Archit, you're trying to solve. Tell me, how big is the potential, and where do you see the next leg of growth coming from? You mentioned you already have an international presence. Any global expansion plans that you can talk about?
Right. So first of all, like this market in India is the early payments, the credit financing, and just the invoice discounting part is a $300 billion opportunity in India. This is a sector which is growing very, very rapidly. If you look at China and Mexico and some of the other emerging markets, they have grown very, very rapidly with invoice discounting. So India is also at the cusp of that. So we will see tremendous scale from this. In terms of our expansion, right, like the core enterprise SaaS product is growing very fast. Financial services, we have started to invest, and we anticipate its growth to be much higher than a higher base, from a small base, much higher than the SaaS business. And the international part, we've just expanded into one country in the Middle East, and now we are expanding to more countries in Western Europe. So basically, we see growth coming from our core enterprise SaaS business, the financial services business, and the international markets, where we will keep expanding market footprint.
All right. Thank you so much, Archit. We've completely run out of time. Wish you the very best with all your growth plans.
Thank you so much.
We Found a Circle is a global community of founders and strategic angels